Well, it's been quite a week, quite a last 2 weeks in gold and silver prices, guys, and in the metals market and also in the Bitcoin market. As you remember, last week I released a video. Actually, I released two videos with my prediction that the silver market may crash. And indeed, for any of you who know Austrian economics, we know that we really can't make predictions because a prediction would entail that we knew the future. And nobody knows the future. That would only be in a perfect world, and economics would therefore not apply. There are three principles from philosophy of investing. We're going to make a whole separate video on that. But there are two Socratic principles. And the one Socratic principle that we're going to emphasize in this video is the principle of the only thing I know is that I know nothing. I know nothing. I know some principles of economics. I know my intuition and what I feel could happen. And using all of that, I have to take the best defensive position that I can. So I want to talk about what's going on with silver and gold. It's all over the place right now, guys. Silver had been coming back. It had been recovering. And in fact, it went back up to $90 an ounce earlier today. It has now flash crashed again, ladies and gentlemen. Silver has flash crashed to 76.48, another 13% in just the last few hours. Now, gold has recovered. At its low, gold was at about 4,400. It is right now, at this moment, at 4,857.70. And again, even at this point, even in silver, if you'd invested in it on January 1st, you're still up. So you're still way up this year for gold and silver. And again, fundamental economics just dictates that over the long term, silver and gold are going to gain value as against fiat currencies, because fiat currencies are going to zero. As we speak now, Bitcoin is also in a bit of a flash crash. It's gone down to $70,761.28 as we speak. Now again, knowing that I know nothing, I think we still need to have a sort of causal explanation as to what's going on in these markets. And the explanation, especially in silver, guys, I think it's very simple. First of all, we have to realize that there is a temporary strengthening of the US dollar. The dollar's rallying because of several pieces of news last week, including the choosing of Mr. Warsh as the Fed secretary. And of course, whenever the fiat currency rises, you will see a temporary lowering or diminution in metals, of course. Second, the nominal interest rates are rising. Of course, the Fed chose not to cut interest rates. Of course, real interest rates are a lot different, but the nominal interest rates, what they're declaring them, are still higher than a lot of people would like. So that's, quote unquote, strengthens the value of the currency. Anything that strengthens the value of the currency is going to diminish metals. And I've made some notes here. The third aspect, guys, is there's a forced liquidation and profit taking in the futures market. Now, this is one of the most important aspects, if not the most important, guys. Listen to this. You see, sell-off is happening in paper, gold and silver. You see, these companies and these banks can make securities that flood the market, and so it makes it seem like there's more gold and silver when there's not that much supply. It's just paper. It's just like fiat currency. And when there's a larger supply of paper, the value will go down, guys. That's why you're seeing the value go down. And this is the main lever, I believe. And of course, I could be wrong. We don't know what the insiders are doing. We can see some of the money movements, but we have no idea what the big banks and the insiders are doing. All we can do is use economic logic, use that Socratic principle that I myself know nothing, and we can sort of try to create a defensive position. When I say defensive, I mean we need to create a position that Nicholas Nassim Taleb would call anti-fragile, which means we need to see what the worst case scenario is and be defensive about it. But if you look at Austrian economics, over time, gold and silver are going to go up. And I believe that this rally in gold and silver is going to continue and that this is a temporary low. In fact, I see now silver is finding its support level. That support level could be 70, it could be 60. It'll still be a lot more than the $40 an ounce that we saw just a few months ago. But I believe once it hits that low level, it's going to stabilize, it's going to go back up. So what I would do, if I were buying silver, I'd buy it at 60, I'd sell it at about 90 to 100, and that's going to be the safe play. We just have to rely in the short term on technicals, guys, on charts. Now, I'm not selling my silver. I'm holding it for the long term because, again, economic law dictates that over time it's going to go up, and history has borne us out on that. Just a word on Bitcoin, guys. What is going on in Bitcoin? And I believe it's the same aspect, guys. The dollar strengthening. Also, people are spooked by more government regulation going into Bitcoin. And I believe that probably the resistance level is going to be $100,000. So I think when Bitcoin gets back to $100,000, it'll be a good time to sell. I think it's still trying to find its support level, and that could be at about 60, it could be at about 50. I've been joking with people, I hope that Bitcoin goes down to $20,000 because I will mortgage everything I can to buy Bitcoin at that point. So again, we're going to keep watching these markets. There's a lot of volatility, and remember, volatility is the friend of the patient and knowledgeable trader. That's just my 2 cents. If you have any more opinions, you could educate me, you could educate all of us. Please do comment in the comments section. So guys, thank you so much for joining me. This is Javier with The Libertarian Investor. Have a great rest of the week.